Hey there, it's Ian with Eagle Business Credit. On today's Eagle Eye, talking a little bit about a downturn or a recession, what to do to prepare your company in order to thrive in difficult times. Well, we've seen a lot of things going on recently. Pandemics, wars. It seems as though the news is just full of bad news. And only recently, the world's second largest container carrier was announcing a 9% layoff in their global workforce. That's significant. A company like that, that's reducing their workforce by that amount, means they're seeing something. And maybe it's going to start to trickle down. Who knows? I don't have a crystal ball, but we know that interest rates are at very high levels. Over 20 years now, we haven't seen interest rates as high as this. We also know that banks are starting to tighten up their lending criteria. We've seen it. We get a lot of calls here at Eagle where maybe somebody's breached a covenant, or maybe they're missing their loan repayments. Maybe they're not with the bank. They took out an online loan and they're struggling to meet those repayments. We're also seeing a rise in bankruptcy levels, up 106% year on year at the time of speaking, which is October of 23. Chapter 11 filings significantly up on last year. And that's mainly because all the government easing that we saw through the pandemic has gone and interest rates are super high now, like I said. So what are smart companies doing? An option they have is factoring, receivables finance. That's what we do here at Eagle. And it's basically a way to ensure that you have a strong cash flow. It's not a loan. You're not going to make repayments. You're going to look at your receivables. And if you sell on credit terms to commercial customers, B2B, then you would qualify for a cash flow finance facility that will help you through difficult times. We base our underwriting not on your personal credit, purely on the customer's creditworthiness that you sell to. So there are many ways that we can approve a business for funding. And it's a smart way to do it. You're not going to worry about your bank covenants. You're not going to worry about repayments. We're going to get paid back by your customer when they pay their invoice. So again, you continue to trade as normal, and you can also use us to get credit approvals for new customers that you might be considering. It's a quick process. We want to get an application from you. We want to look at your accounts receivable aging, copy of an invoice, and we can make a decision usually that same day or the next day and get a proposal out to you. So banks can't move that fast. Also, banks, when they're tightening up their credit criteria, are going to look at your personal credit or your balance sheet. We're not really interested in that. Like I said, we base our approvals on your receivables. So it really is a working capital solution that moves in step with your business. And it's not retrospective. So again, your balance sheet's not that important to us. We certainly are not going to underwrite on the strength of that. You could be a new start company. You could be growing really fast. And with a bank loan, it's always going to be, like I say, retrospective, looking at your net worth, your profitability, and not what you're doing today in terms of your customers and how you're growing the business. It's very flexible. It's going to be tailored to meet your needs. We often find that companies come on board and it helps them grow, so we need to increase our facilities for them and reduce their rates at the same time as a volume discount. So it is a great way to get the focus back on your business and the funding that you need. So if you're worried about a downturn, if you're struggling to meet repayments, talk to us at Eagle. We'll be glad to help you. We can provide many different solutions, whether it's receivables funding, purchase order funding, or just guidance in terms of how to collect your invoices in a more timely manner. We'd love to speak to you. Give us a call.